guys, welcome to this video, a quick video of what I'm expecting this week. But first of all, before I get to delete everything, then I need to talk about what happened on Friday and what did I take as of Friday's or last week trading. So I have been trying to short EU, and what I was trying to target was this weekly fair value gap that currently has been traded into. We're gonna look next into what I'm really expecting to see, but this was the first week I was trading last week. So as of Friday, if we can go to the 4-hour daily time frame, I wanna rush because wanted this to be really quick, but let me also try to slow down because I know some of you individuals are also learning. So from this, what I'd seen is for EU, this Euro USD, we had formed an SMT whereby we can see as of Thursday, this day didn't really sweep the Wednesday high, meaning is the weaker pair going lower, what I did talk about the previous video. And also if we go to GU, we can notice this high had also swept the Wednesday's high, meaning we have a higher high, meaning this pair was the weaker, the stronger pair, right? And if we are bearish, then we want to trade the weaker pair, right? After seeing that, and I talked about what happened as of Wednesday. So now coming the new day, what I'd seen is the market respecting these the low of these candle. We closed below that low, and to me now I was really expecting to see because this low had already been taken, I wanted to see this weekly fair value gap being taken. So at that moment in time, if for GU I'm bearish, also for EU I'm bearish. If for EU I'm bearish, then definitely for GU I'm bearish. So upon coming around 8 a.m. New York time, what I'd seen, we had this 4-hour fair value gap, which I was talking about in my previous video, whereby I had a sell position with this candle. The market had already dropped near to my TP, but we rejected back to confirm this fair value gap. So I closed minus 0.27 RR because of this fair value gap. This, if I could have waited, maybe held my trade, then my SL would be hit, then the market would rally back to the 4-hour fair value gap. So I wanted to avoid the full loss because I definitely knew the market will be coming either this 4-hour fair value gap or this 4-hour higher fair value gap. So that's the story for Wednesday, I think. And now on Friday, what it's seen, price reacted off the 4-hour fair value gap, tanked lower nicely, but also the price action for GU of that 4-hour fair value gap was more cleaner because you can see over here this candle tanked heavily lower, confirmed that fair value gap with a consolidation candle, and you can see the price action with these, we had closed below these down up close candles. But for EU, you can see the price over here. Yes, we had closed, but the fair value gap was slightly higher, right? So the market, what it did, we rallied higher back into that 4-hour fair value gap. We exceeded it back into that 4-hour fair value gap. We swept those liquidities. We formed a higher high, which I saw later on to be an SMT. I didn't notice that because you can see if I get rid, yeah, so you can see if I had taken the trade on GU, I should have taken the trade on GU because that was the weaker pair. So the high we were considering was this 5 a.m. candle, didn't really sweep these highs. So the 17 wasn't really swept by the 5 a.m. Candle. But for EU, what we notice is this candle 5 a.m. cleared the 17 and also the 13. So we created a higher high, meaning these are stronger pair. And for us to be shorting, we want to short the weaker pair. And also with the rejection going lower, you can see we did reject so heavily here, but we didn't close below this up close candle. But if we consider for GU, we rejected off that 4-hour fair value gap nicely, off also the OTE levels. I had that marked up OTE levels. We closed below that down close candle. So this was the pair I should have maybe taken a trade at this candle, but was good. So for EU, how I did interpret that, because that's what I really traded. So I had dropped off the 1 hour time frame. So off to the 1 hour time frame, and this was the level I was watching for. Not that this 4 hour fair value gap, we had another 4 hour fair value gap confirmed there nicely. This I wanted to see a reaction of that, so I dropped onto the 1 hour time frame. Price didn't give me any sign of retracing with this within this candle, the 7 a.m. candle, but the 8 a.m. candle opened, tanked lower, and as we were closing, right, as I dropped further into the 15 minutes time frame, so I saw those fair value gap being formed. So we had these fair value gap into that 4 hour fair value gap. We also had this one other fair value gap that led to this other fair value gap. Upon seeing the market was about to confirm a second fair value gap, I saw the need to drop onto the lower time frame, the 5 minutes, and try to observe what was happening. So we saw fair value gap performed, we had another fair value gap respected. So as the market was dropping lower, then I took my position there. We consolidated a little bit, and then later on, I think I closed my trade at this point as I saw the market reversing, disrespecting these 15 minutes fair value gap. As I said, my I think was up at a 0.4 something RR. These, yeah, was around 0.5 there, and then we kind of consolidated, but I think to me it was ideal because the weekend was coming. I didn't really want to be in a trade for that long period with those consolidations having in play. But if I had taken a GU position, right, because you can see now that was the weaker pair, so I didn't really take this. I just placed these immediately. I took the trade, so I took an EU trade at around at this time 850. So if I took a trade at around 850 for GU, right, this candle, as this candle was printing, assume at that point in time, then my 1 to 2 would have been met if I were to trade the weaker pair, right? You can see how the strength was, and my TP would have been hit 1 to 2, but because I traded the stronger pair, you can see price really didn't displace lower. So I think it's always, whenever I'm coming to, even though I knew the long term, that the long term the external structure, that EU was weaker because of this SMT, but also within the range, within these internal structures, or within internal price legs, I should also consider the weaker and the stronger pair. But after all, was a good trade, was a good price lead for the week. And now let's see what we have for this coming week, and we can start with also gold, by the way. Also gold had some nice price action. All right, come on. So gold also had some nice price action. We had seen that this was the target I was trying to reach for the daily fair value gap. If we can go back to the daily time frame as of Friday, right, this was the fair value gap I wanted to see the market rally to. Then as of Thursday, we rejected, but indeed the structure was bearish, though we had fair value gaps pushing lower, and then fair value gap pushing higher. Then on Friday, when I wanted to see the market dropping lower, and so during the New York time, from what level was I watching for price? If we try to observe the structure of the 4 hour, we had seen price dropping and creating another block with bearish fair value gaps. We had already swept this low, but to me, I knew this were liquidity is being engineered and the market is likely to be bearish. So I identified my 4 hour fair value gap, of which I wanted to see reaction. Then at around 5 a.m. we had us sting into it. I usually trade these 9 a.m. candle, so wanted to see the market drop lower. So I also had a fib level, ensuring that the market needs to displace to the premium levels, and specifically the OTE levels. The market stang into that, and then off there trying to look for a position. So this trade, immediately this candle closed, then if I dropped to the 5 minutes time frame, you could notice we had this fair value gap over here. which had created a market structure shift. So immediately this other candle closed, entry there, and you can see how fast the move was. And whenever we are considering whether the market is really bullish or bearish, we should consider how price action tend to move against us. So right, remember this, we are bearish, but you can see the price action is so choppy, going higher but very quick dropping lower. So that was the other sign that made me know that indeed the market isn't really bullish. I shouldn't try to look for bullish prices, but go in for short opportunities. Same to this price action. The market is really rugged, choppy, going higher, but whenever we are displacing, we displace so heavily. Also, if we consider a bullish, in a bullish structure, right, in a bullish structure, whenever we are dropping, whenever we are consolidating to sweep liquidities and then continue higher, see how we tend to range, and then later on we displace higher, we consolidated for a while, and then the market started displacing higher and higher. So whenever trying to trade against, always consider being chopped off or the market being choppy, right? And that is it. And now let's do a quick reflector of what I'm expecting for this other coming week. I need to clear everything to make the charts clean. So as I was saying, if the market is really bullish, you can see whenever the market is ranging, or some individual trying to cut short or calling the high, see it's not really moving that nicely. It's consolidating, moving down while consolidating, then we displace nicely, going higher. The same over here. And now what we're seeing from the monthly, the weekly, and need to go to the monthly. We have 8 days, 6 hours before the monthly time frame closes, and I think for the 3 months will be closing also in 8 days. So could this be the high? I don't want to call the high, right? What I want to see is read price, what price is actually telling me. So for now, what we only have to draw the market going higher is either those all-time highs, which if we drop to the weekly time frame, we'll notice is a weekly high, or these previous months low. But the 3 months is a higher time frame. So we need also to note, be keen with we have a possible monthly fair value gap at that moment in time, right there. There we go. So we have this monthly FVG, of which maybe we can continue higher for the monthly time frame, and also we have these lower ones. So we need to be mindful of that. And though it's kind of far, I need to have it below and go back to the weekly time frame. So from the weekly time frame, not really trying to consider much about this. If we don't concentrate much about this FVG, what we can notice is we have the market being bullish. We tap into that weekly fair value gap, sting into it, we displaced higher, created another block, or also fair value area, as well as which you can call a mitigation block. But what you have is another block, a down close candle that has been fully engulfed. We also have a fair value area, price leg number 1, 2, and also 3. So we confirmed that weekly fair value gap, which is aligned so there. So this one, I will ensure that yeah, it's not really, yeah, we have a monthly FEG. Yeah, there we go. But also we have this weekly fair value gap that that the market has confirmed a bullish structure, because we have broken structure. We have also formed a bullish fair value gap. So is it likely that we might see us thing into that fair value gap and then we continue higher? We also have these other fair value area from this high, which happens to be overlapping with the midpoint over that weekly fair value gap. So we have this weekly fair value area. And what is the use of that weekly fair value area? We want to see a rejection of that. If the market really disrespect this area, we can anticipate the market rallying next month to these weekly to this monthly fair value gap, paired with these weekly fair value areas low. So that's why I want to have it at that point in time, because it will be directing me. If the market doesn't reject of that going higher, then we can anticipate a drop to that weekly the monthly fair value gap. So those are the two levels I will be trying to watch for, right? I need to ensure everything is in line. So yeah, we have that overlapping with the 50% of that weekly fair value gap, and also we have this weekly IR not aligned. So we also have this weekly IR, this moment in time. Yeah, should be at the bottom right. So we have the weekly IR also, which is a key level of which we might also see price pushing higher off of. A good example is this. We had formed that weekly fair value gap, but this next week didn't really sting into that fair value gap. Then we continue higher. We only created an immediate rebalance. We continued higher. Later on, that's when we saw price deliver into that weekly fair value gap. So we will be mindful of also that, but we need the lower time frame confirmations of these. All right, so right there, so we have the fair value area over here being clear. We also have daily fair value gaps. So weekly IR over here, could we see maybe price stinging into this IR and then rejecting going higher, or could we see a deeper retracement into this weekly fair value gap and then later on sting into that weekly fair value area and reject higher? So that's what I will be really watching for gold and see what will be happening. And my main outlook, I want to see a sting, something like this, sting into that weekly fair value gap. That's what I want to see, and then possibly we continue to this weekly high. So my target will be, let me ensure I'm aligning everything right. Yeah, so we have these previous week's high, which will be my draw on target going higher. And also, if the market will be trying to be going lower, then if we disrespect this weekly fair value gap, then I will be watching for price deliver to these lows. If we disrespect this fair value area as well as the weekly fair value gap, then I will be expecting to see the market dropping towards these lows. So that's what I will be watching for, those levels. And yeah, so from the daily time frame, if we try to disrespect these fair value area, then we have another fair value gap as well as all these relative equal lows resting below these lows. You can see we have two equal lows. So we'll be watching what will be happening there, but from the 4-hour time frame, what we can see is a bearish structure. And whenever we are going against the trend, remember, we tend to have choppiness. But with this one, it's a clear bearish structure. We are breaking through lows. We are displacing, forming fair value gaps. Now, on Monday, we might try to look for a short, maybe to this one. Then wait until we have clear confirmation if we should be going higher towards this high, or we should be going towards these lows. So that's what we will be watching for gold. A drop into that weekly fair value gap, then anticipate a push going higher. If we fail to respect this weekly fair value gap, we can be dropping lower. So if we rush quickly, I don't know, yeah, 20 minutes, this is too much. I guess should right there. So if we start from the 3-monthly time frame for EU, what we notice is currently we have swept the 3-month low. We have 18 days before this candle closes. We have stung into that monthly order block, the last up close candle. Indeed, we are rejecting off that, but what we can see, we also swept the 6-month candles low. We rejected. We are pushing higher. The candle has 3 months before it closes, and if we take the accumulation, manipulation, and distribution phase of a candle, and distribution phase usually tries to happen maybe from the 2nd month of the 6-month candle. So we might be in the distribution phase of this candle, but we have to see confirmations of the lower time frame that we are expecting maybe distribution going higher. And where are we likely to go to? Maybe to this high, but for now I don't really want to call this to be the low, or maybe to call this is the phase minus confirmation. We need confirmations so that we may be in agreement. So from the 3-month also, we have swept the candles low. Could we be going for this 3 months high? We actually don't know. So of the 3 months, what you can actually see is from the low to the high of this price. Like so, this is the low and this is the high. We are not really displacing, we are within that range. So price stang into the OTE levels, and currently we are seeing we are displacing. We may be going higher after sweep of these liquidities. After sweep of these liquidities, we are displacing, going higher. And if indeed the market will be going higher, then what we want to see being taken is these a rejection block over here. Maybe assume, let's put it at this candle's high. So if the market indeed is bullish, then this is the high we can target. But for now, we need confirmations to confirm that. The monthly time frame has 8 days before it closes, and this thing below, we can see the market rallied into these the OTE levels, which we had monthly fair value gap. We did have a sting into it, and then we are currently rejecting, and we are really pushing heavy. And we had this bearish fair value gap, which isn't really being respected for now. We had this other one which the market stung and we are currently respecting, but this other one isn't really respected. We also have this a monthly fair value area. If the market doesn't react off that, then we can anticipate the fair value area high being taken. So somehow, because we are disrespecting this bearish fair value gap, overlapping, but this candle, remember, hasn't really closed. We need to wait for it to close to see whether it has been respected or it is yet to be respected. So we are currently not reacting off the fair value gap, also off the fair value area. So somehow we can say we can expect to see the fair value area high being taken, but nothing really much of this price action. Maybe we see what the weekly time frame has. The weekly time frame, we have the weekly fair value gaps. Let's start with the weekly fair value gaps. don't have any fair value gap within this range. We were consolidating a lot, then the market broke structure at this moment in time. We broke structure, also we broke structure through this high. We are currently this fair value gap had already been traded into. We are currently disrespecting them by closing above, creating other bearish fair value gaps. What we're also noticing is we have this fair value area that is being disrespected, so somehow we can expect to see the market going higher towards that high, and I'm expecting long-term prices to be bullish. But from which areas are we likely expecting the market to react off of? We have this weekly fair value gap. Yeah, we have these I don't know, yeah, we have these weekly fair value gap. Need to be black. Yeah, we have the weekly fair value gap, of which indeed, if the market is really bullish even towards this weekly fair value gap, we have a weekly fair value gap which aligns with, which is in close proximity to these highs. So these highs will be the first target, then we have the second target, which is the weekly fair value gap, and then we have the monthly high, which we can target later on. So I'll mark up the previous week's high, and also of the fair value gap. That's what I'm really expecting. But what we're seeing is we have a bearish engulfing candle, so we have a bullish argument, we have a bearish argument, because this candle is confirming to be a bearish engulfing candle, sweeping the high and also closing below the opening and the closing price of the previous candle. We can expect the next week being a week dropping because of that. But since the higher time frame is telling us we are expecting higher prices, then we want to align with the higher time frame. If we need to short quick ins and outs, that's what I'm trying to get this week. So also we are dropping, we are into that weekly fair value gap. Let's see, has the weekly fair value gap been traded into? Yeah, the weekly fair value gap has been traded into. So I will also try to monitor how price reacts to this weekly low, because what you can see with price over here, we did sweep this previous candle's low, and then we rejected closing at this moment. We didn't close below this candle's low, so we might also see that a two candle rejection of this weekly fair value gap, maybe a sweep of that, then we displace going higher. So I need also to be very keen with that. So previous week's low, bottom right, yeah, because long-term wise, we are really, or price is more of bullish, right? So we might consolidate for a while, sweep those lows, consolidate, or maybe extend into these daily fair value gaps, then we continue higher with the first target being the previous week's high. So I will be watching how price reacts to that weekly low. If we react, we displace below that, then we have all these imbalances, maybe to the midpoint of this weekly fair value gap. And do we have a fair value area? No, we don't really have a clear fair value area. So maybe to those towards these daily fair value gaps, reject, then we continue higher. But I need more confirmation, because what we are seeing from EU, we have both bullish and bearish arguments. So more confirmation is actually needed. If we cross over to GU, right, then I try to, so for GU we can see that if we go to the monthly time frame, what are we seeing from the monthly? We did disrespect this fair value area. We don't have any fair value gap there. So if we respect our fair value area, then we want to see the fair value area high being taken. Nothing really much that could attract the market around this point other than this order block. But of the weekly time frame, we are creating shifting structures, we are creating fair value gaps that are being respected and then pushing the markets going higher. So, and what could also can we target? We have these weekly fair value gap this moment in time, but also we had created the previous week's high. So PWH, previous week high, top right, and we have these weekly fair value gap which we might react off of going lower. Yeah, so we have the weekly FVG of which we might sting into, then we react higher. We have a market structure shift, or we also have the fair value area confirmed over here. Had price leg number 1, 2, 3. The market closed above it, or we can count 1, 2, 3. So we have this fair value area around that point in time. So since that high is overlapping with a fair value gap, that's why I'm using the highs. So we have weekly fair value area, and then all right, should be top left with that color. Yeah, we have the fair value area of which we might see a sting into, and then we react higher. Let's see what the daily has. The daily has a fair value gaps also around that moment in time, and with this bearish structure being formed, because we are currently seeing the market forming a bearish structure, we might see a drop onto that daily fair value gap or the weekly fair value gaps. Then off that, that's when we will maybe see, are we really likely going to be bullish, right? So something like this of the weekly fair value gaps. Are we gonna see something like this, or price will disrespect this area, and then we can maybe go for these fair value gaps, also see whether these fair value gaps gonna be gone for. So that's what I will be expecting for the three pairs. And now let's check on DXY to have some more clarity. Yeah, DXY looks so bearish of the weekly time frame, and we had that monthly FEG that has been traded into, so we are reacting off. All right, we are reacting off a monthly fair value gap for DXY, which from GEO and EU we haven't really seen that, so we are reacting off that fair value gap, and we did disrespect because we are going deeper into this range. We might maybe yes, be bearish towards this fair value area low, but for now what we're seeing is a nice rejection of that monthly FEG. It's monthly FEG, and then off the weekly we look so bearish. We have that weekly fair value gap that has been traded into, now the weekly FEG that has been traded into. And what will be what I will be watching for, because the structure over here seems the market has created a bearish structure, bearish fair value gap, but also we are reacting off a bullish fair value gap, so will be a good thing to see. And also if I try to see this structure, is we are forming a bullish engulfing candle, sweeping the candles low, and also displacing going higher with a two candle rejection of this weekly fair value gap. So will be a nice to watch how the market reacts. And also if I use the fib levels, we might so from the high towards the low, we are seeing we are currently deep in discount. We are currently deep in discount. We might push higher for DXY. Because of that two candle rejection, though it's a bearish fair value gap, that's why it's ideal to have more confirmations and not to trade without confirmations that indeed the market has displaced higher. Of the daily, we don't have many fair value gaps, but what we can see is we have a sweep of liquidity at a key level. We have an order block being formed. We don't have displacements with fair value gaps, so we need to wait for more confirmations. If we see structure being created and broken through, for instance, we have fair value gaps being respected, and also we see other fair value gaps being formed going higher, then we can also anticipate to see these fair value gap being taken, and then off that we will see can the market rally to the above the 50% level, then we continue lower, or we react off the weekly fair value gap, just continuing lower. So that's what I'm expecting. I will be watching for DXY mostly to have some clarity, because we are seeing what EU and GU doesn't really have. So DXY is one that will give me direction, then I'll go engage in either EU and GU after identifying either the weaker or the stronger pair. So that is it for this video. Looking forward to have a nice week, this trading week, and during the trading weeks, hopefully I will be catching you guys. I'll be catching up with you guys via my Telegram channel. So have it major, have it great, and enjoy your weekend.